Circle stock. Is it still worth buying in 2026? 1. What if Wall Street is looking at the wrong company? What if I told you, one of the biggest winners of the next financial revolution may not be Bitcoin, may not be Ethereum, and may not even be a traditional bank?
Instead, it could be a company that most investors have barely started paying attention to.
Circle. At first glance, Circle doesn't look exciting. It doesn't build electric cars. It doesn't manufacture AI chips. It doesn't launch rockets into space, but behind the scenes, Circle powers billions of dollars moving across the global financial system. Quietly. Every single day. Here's what makes this even more interesting.
Some experts believe stablecoins could eventually become as common as credit cards.
Others believe they could replace many traditional payment systems. And Circle sits right in the middle of that transformation. So, is Circle building one of the most important financial companies of the next decade? Or is the market getting carried away by another exciting story? Stay until the end, because one little understood part of Circle's business
could become much bigger than most investors imagine.
And if that happens, today's valuation might look very different a few years from now. But before we talk about the opportunity, you first need to understand why Circle is completely different from most crypto companies. 2. Circle is not just another crypto company. Whenever people hear the word crypto, they immediately think about wild price swings, Bitcoin, Ethereum, speculation, and risk. That is where many people stop learning. But Circle operates in a very different part of the digital asset world. Instead of creating another highly volatile cryptocurrency, Circle helped build something designed to remain stable. That product is called USDC. Unlike Bitcoin, USDC is designed to maintain a value close to $1. That stability changes everything. Instead of trying to become a speculative investment, USDC aims to become useful. People can send money. Businesses can settle payments. Developers can build financial applications. Institutions can move funds more efficiently. And all of this can happen around the clock. 24 hours a day. 7 days a week. That means Circle isn't simply betting on cryptocurrency prices. It is helping build financial infrastructure. Think about the internet.
Most people remember companies that build websites.
But many of the biggest winners were the companies that built the infrastructure behind the internet itself. Some investors believe Circle could play a similar role for digital finance. But infrastructure businesses usually become valuable for one simple reason. They solve expensive problems, and that brings us to Circle's biggest opportunity. 3. The problem Circle wants to solve. Imagine sending money to another country.
Sometimes it takes days. Banks charge fees. Currency conversions add more costs.
Businesses wait. Customers wait. Everyone waits. Now imagine the same payment arriving within seconds. Available day or night. Without waiting for banks to open. That is the future many financial companies are trying to build.
Stablecoins could become one of the technologies making that possible. And Circle wants USDC to become one of the world's most trusted digital dollars.
If that happens, every new payment, every new business, every new financial application using USDC could strengthen Circle's position. That is why many of the world's largest financial institutions have started paying much closer attention to stablecoins. The opportunity is no longer limited to crypto traders. Banks are watching. Payment companies are watching.
Governments are watching. Wall Street is watching.
And investors are beginning to ask a very important question. If digital dollars become a normal part of everyday life, who benefits the most? We'll answer that next. 4. How Circle actually makes money. Now let's answer one of the most important questions. How does Circle actually make money? Many new investors assume Circle earns money every time someone sends USDC.
That is only part of the picture. The real business is much more interesting.
When USDC is issued, every digital dollar is designed to be backed by reserves. These reserves are generally held in highly liquid assets, such as cash and short-term U.S. government securities. Those reserves can generate income. This has become one of Circle's biggest revenue drivers.
Think about it this way. Imagine billions of dollars sitting in secure reserve assets.
Even relatively modest interest rates can produce significant income at that scale. That is why interest rates matter so much for Circle's business. As USDC adoption grows, the amount of reserves may also grow. And larger reserves can potentially lead to higher revenue. But Circle is not relying on one source of income forever. Management is expanding into additional financial services, developer tools, business payment solutions, infrastructure for financial institutions, and blockchain technology. The goal is simple: build an ecosystem.
Not just a single product. That strategy could make the business stronger over the long term. But Circle has another advantage that many investors overlook.
And it could become one of its biggest competitive strengths. 5. Why USDC could become one of the world's most trusted digital dollars.
Trust. That single word could determine the future of digital finance. Money only works when people believe in it. Businesses demand reliability.
Institutions demand transparency. Governments demand compliance.
Circle has spent years focusing on those areas. Instead of chasing headlines, the company has worked to build credibility. For large financial institutions,
trust is often more important than speed. If a company wants to move millions of dollars, security becomes essential. That is where Circle believes it can stand apart. USDC has become one of the world's largest stablecoins. It is used across exchanges, payment platforms, financial applications, and blockchain networks. Every new integration expands its reach. Every new business using USDC strengthens the ecosystem.
This creates a network effect. The more people use it,
the more valuable it becomes for everyone else. That is exactly how many successful technology platforms grow. But Circle's future may not depend only on crypto. Its next opportunity could come from something much bigger: traditional finance itself. 6. Wall Street is starting to pay attention. For years, many banks stayed on the sidelines. Many investment firms watched from a distance. Many businesses avoided digital assets completely. That attitude is changing. Large financial institutions are exploring tokenized assets, digital payments, blockchain settlement, and stablecoins. Some are even testing how digital dollars could improve the speed of moving money around the world. This is where Circle could benefit. If traditional finance adopts stablecoins on a much larger scale, Circle may already have one of the strongest positions in the industry. Imagine companies paying suppliers instantly, payroll arriving in seconds, international transfers becoming faster and cheaper.
That future could create enormous demand for trusted digital dollars.
And if demand grows, Circle could grow alongside it. But before investors become too optimistic, there is one major challenge that could shape the company's future more than anything else: regulation. And that is exactly what we'll examine next. 7. The regulation question. Every great opportunity usually comes with a major challenge. For Circle, that challenge is regulation. Governments around the world are still deciding how digital assets should be regulated.
New rules could create uncertainty. Markets could react quickly.
Stock prices could become more volatile. That sounds like bad news. But there is another side to the story. Clear regulations could actually help Circle. Why? Because large banks and financial institutions usually prefer operating in regulated environments. The more confidence they have in the rules, the more comfortable they may become using stablecoins.
Circle has consistently positioned itself as a company focused on compliance and transparency.
If governments establish clearer frameworks for stablecoins, companies that are already prepared could have a significant advantage. Some investors believe regulation is the biggest risk. Others believe it could become one of Circle's biggest opportunities. Nobody knows exactly how the rules will evolve, but one thing is certain: every serious investor should keep watching this area closely. Because regulation could shape Circle's future for many years. But regulations are not the only challenge. Competition is becoming stronger every year. 8. Competition is getting tougher. No successful business stays alone for long. When an industry begins growing rapidly, new competitors always arrive. Circle is no exception. Other stablecoin issuers want market share. Large technology companies continue exploring digital payments. Banks are developing their own blockchain solutions. Financial institutions are investing billions into payment innovation. Competition could pressure profits. It could force companies to innovate faster. Launch new products, reduce costs, and improve customer experience. Fortunately, Circle has already built something valuable. A recognized brand, a widely used stablecoin, strong institutional relationships, and years of experience operating in digital finance. Those advantages are not easy to copy overnight. Still, leadership can never become complacent. The companies that stop innovating often lose their position. That is why investors should continue watching how Circle expands its products and partnerships over the next several years. Now comes the question every investor wants answered. What is the bull case? Why do some analysts believe Circle could become one of the biggest financial companies of the next decade? 9. The bull case for Circle. Let's start with the optimistic view.
Imagine a future where stablecoins become as common as online banking.
Millions of businesses begin using digital dollars. Cross-border payments become nearly instant. Financial applications continue expanding. Banks integrate blockchain technology into everyday services. If that future becomes reality, Circle could benefit enormously. Every new business using USDC, every new institution joining the ecosystem, every new payment flowing through digital dollars could strengthen Circle's position. The company is also expanding beyond a single product. Infrastructure, developer tools, enterprise solutions, financial services. Each new business creates another potential source of long-term growth.
Some investors compare this stage of digital finance
to the early days of cloud computing. Few people imagined how important cloud services would eventually become. Today, they power much of the digital world. Could stablecoins follow a similar path? No one knows for certain, but if they do, Circle may already be one of the companies helping build that future. However, every investment has another side, and Circle is no exception.
We'll examine those risks before reaching our final verdict.
10. The bear case. Now let's examine the other side. No investment is risk-free, and Circle has several important risks that every investor should understand. The first risk is interest rates. A meaningful portion of Circle's revenue is linked to income earned on reserve assets. If interest rates decline significantly, that revenue could also decline. The second risk is adoption. Many people believe stablecoins will become a major part of global finance. But there is no guarantee that adoption will happen as quickly as some investors expect. Technology can take years to become mainstream. The third risk is competition. New stablecoins, traditional banks, payment companies, and financial technology firms are all investing heavily in digital payments. The market could become much more crowded. Then there is cybersecurity. Any company handling financial transactions must continue investing in security. One major security incident could damage customer confidence.
Finally, there is valuation. Sometimes a great company can still become a poor investment if investors pay too much for the stock.
That is why smart investors focus on both business quality and price. Not excitement alone. Not social media trends, and not fear of missing out. Understanding both the opportunities and the risks leads to better long-term decisions. 11. Should beginners buy Circle? If you are new to investing, don't ask, will this stock double? Instead, ask yourself 3 better questions. Do I understand how Circle makes money? Do I believe stablecoins will become a bigger part of the global financial system over the next 10 years? Can I stay invested even if the stock becomes highly volatile? If your answer is yes, Circle may deserve further research.
If your answer is no, there is nothing wrong with waiting.
Great investors know that patience is also an investment strategy. Many successful portfolios combine growth stocks, dividend stocks, ETFs, and selected innovative companies. This approach can reduce risk while still providing exposure to emerging industries. Circle could become one part of that strategy, but it should never be the entire strategy. Diversification remains one of the most powerful tools available to investors. 12. Final verdict. So, Is Circle stock still worth buying in 2026? Circle sits at the center of one of the biggest transformations in modern finance. Digital payments, stablecoins, blockchain infrastructure, and institutional adoption. If these trends continue expanding, Circle could become one of the most important financial technology companies of the next decade. But investors should also remember, this is still a young company operating in a fast-changing industry. Growth opportunities are significant, so are the risks. The most successful long-term investors usually focus on business quality, competitive advantages, financial strength, industry trends, and patience. Not daily headlines, not market hype, and certainly not emotional decisions. No one knows exactly where Circle stock will trade next month, or even next year, but investors who continue learning, study businesses carefully, remain diversified, and think long-term, often make better investment decisions. If you enjoyed this analysis, subscribe to Wall Street Pulse. Every week we explore the companies, ETFs, technologies and market trends shaping the future of investing. Before you make your next investment decision, remember this. The biggest winners are not always the companies making the loudest headlines. Sometimes, the greatest opportunities are quietly building the future while everyone else is looking somewhere else. And the next company we uncover could be the one Wall Street is still underestimating.